If you have been watching the retail boards lately, you have probably seen the absolute frenzy surrounding Ondas Holdings. With a jaw-dropping 44% short interest circulating on social media, the internet is convinced we are on the verge of a massive parabolic short squeeze that is going to send this stock straight to the moon. Meanwhile, on the other side of the fence, the bears are screaming that this is nothing but an unprofitable roll-up that is headed straight for a fast descent to zero. But if you actually dig into the numbers, you will find that both of these popular narratives are fundamentally wrong. What we are actually looking at is one of the most misunderstood, highly calculated structural setups in the entire market today. And in this video, we are going to break down every single layer of this story, from the technical chess match playing out on the charts, to the billion-dollar balance sheet fortress protecting the downside, to the earnings catalyst just days away that could change absolutely everything for Ondas shareholders. If that sounds like the kind of deep analysis you have been looking for, do me a quick favor and smash that like button. And if you are new here, hit subscribe so you never miss a breakdown like this one. Now, to understand why the obvious conclusions are completely missing the mark, we have to break this entire situation down into three core pillars. At first glance, Ondas looks like a highly volatile, unpredictable mess, but underneath the surface, there is a beautifully structured three-pillar thesis unfolding. First, we have the technical reality. Despite massive daily swings, this stock is being held tightly within a very strict, institutionally defended trading structure. Second, there is a massive fundamental shift underway. This is no longer a tiny speculative drone startup. It is a rapidly scaling prime defense contractor, backed by a literal fortress of cash. And third, we have the asymmetric setup, a situation where massive, quiet, institutional buying is meeting a coiled short interest powder keg. This combination is setting up a unique risk-reward profile for long-term investors. But before you get too bullish, we need to address the skepticism, starting with how our technical predictions from late July actually played out when put to the test. Back in our video on July 27th, we laid out a highly contrarian roadmap. We warned retail traders not to expect an overnight chaotic meme stock blowout because the massive trading volume would allow short sellers to cover their positions in an orderly fashion. We also predicted a strict trading band, stating that a firm institutional safety net would catch the stock near $6, while a heavy wall of overhead supply and equity dilution would cap any rallies near $9. Over the last 10 days, the market tested every single one of those claims and validated them flawlessly. To see exactly how this battle between the buyers and the sellers played out in real time, let us look at the daily candles. Look at this technical chess match. On Wednesday, July 29th, bad news about a Pentagon drone component shortfall hit the sector, and ONDS plummeted on heavy volume. Retail panic set in, but look where the stock stopped. It hit an absolute intraday low of $6.77 and closed at $6.80, violently bouncing off our predicted $6 support floor. Then, the catalyst engine started. Following news of BlackRock's massive stake, the stock staged a powerful 11.4% recovery. By early August, a series of massive defense announcements pushed the stock up to test the ceiling. On August 4th and 5th, ONDS spiked intraday to $9.09 and $9.13, but notice how it failed to sustain a single close above $9. The moment it crossed that line, early acquisition holders cashing out acted as a heavy wall of sellers, absorbing all the retail momentum. Now, this range-bound technical battle is highly profitable for swing traders, but the short-term price action is actually obscuring a much larger fundamental re-rating that is quietly taking shape beneath the surface. Here is where the story starts to get highly compelling. Many investors are still valuing Ondas as if it is a speculative, early-stage drone roll-up with unproven technology. But what if the company you thought you knew has already fundamentally changed? What if the market is pricing in the old Ondas while a completely different entity is emerging right before our eyes? Because what we are witnessing is a massive structural pivot. Ondas is aggressively consolidating premier defense assets, building out elite leadership, and securing long-cycle sovereign government contracts. They are transitioning into a scaled, multi-domain autonomous defense prime contractor executing on major multi-year agreements. And if you want proof that this fundamental pivot is accelerating, you do not have to look far. Just look at the relentless staircase of catalysts that dropped this past week. Just this week, the company dropped a rapid succession of top-tier catalysts, and honestly, the speed at which these announcements came in was staggering. On August 3rd, they pulled off an elite leadership coup by appointing David Barnea, the former director of Israel's Mossad, as global president and chairman of Ondas Defense. Think about that for a second. A former head of one of the most legendary intelligence agencies on the planet is now running their global defense operations. His unmatched national security background gives Ondas direct, high-level access to secure sovereign contracts across the Middle East, Europe, and Asia. Just 2 days later, on August 5th, their subsidiary Mistral secured a massive $50 million plus task order from the United States Army for tactical lethal unmanned systems. And to top it off, on August 6th, they secured a new Air Force research contract for their Grasshopper autonomous delivery system, further diversifying their sovereign government customer base. 3 blockbuster catalysts in 4 days. Could this kind of momentum be a coincidence, or is management strategically stacking announcements heading into earnings? That sounds incredibly impressive, but as disciplined financial analysts, we have to ask the harder question. How do these contract bookings actually translate to the top and bottom line? Here is the mathematical engine behind Ondas' growth story, and this is where the numbers start to speak louder than any headline. The acquisition of DZYNE Technologies, which closed on July 2nd, fundamentally changed the financial trajectory of this company. Prior to this deal, management was targeting a minimum of $390 million in revenue for fiscal year 2026. Following the acquisition, they hiked that guidance by over 34% to an astonishing $525 million. Let that number sink in. DZYNE alone is projected to deliver $191 million this year and is expected to surpass $300 million in 2027. But the real kicker here is profitability. Unlike typical early-stage drone startups that burn cash indefinitely, DZYNE is already EBITDA positive, giving Ondas a mathematically clear pathway to make their entire combined defense portfolio EBITDA positive by 2028. Could we actually be looking at a defense company that reaches sustained profitability far faster than anyone on Wall Street currently expects? But the technology validation goes even deeper than their own financial statements, reaching into the elite tiers of the Silicon Valley defense tech ecosystem. One of the most overlooked aspects of the DZYNE acquisition is its deep, ongoing strategic partnership with Palantir Technologies. DZYNE and Worldview are actively integrating their hardware systems with Palantir Foundry to co-develop advanced AI-powered intelligence, surveillance, and reconnaissance data engines. Now, in the defense world, a partnership with Palantir is the ultimate heavyweight validation of your technology stack. It proves that Ondas' proprietary autonomous software is not just functional, it is sophisticated enough to integrate with the world's premier defense operating system. How many small-cap defense companies can say they are building mission-critical systems alongside Palantir? The answer is almost none, and that exclusivity alone should be making investors pay very close attention. All of this growth and high-tech integration sounds amazing, but in this macro environment, growth without financial safety is a trap. So, how safe is Ondas' balance sheet? This is the slide that should make every single bear sweat. The single most powerful defense against downside risk is Ondas' fortress balance sheet. Ondas is sitting on over $1 billion in pure cash, restricted cash, and short-term investments. And get this, they have zero traditional debt. Zero. This means that roughly 20 to 25% of the company's entire market capitalization is backed by hard cash. Think about what that means for downside protection. This massive safety net gives Ondas a guaranteed 3-year runway to fund operations, integrate acquisitions, and execute on their massive $457 million backlog without ever having to worry about bankruptcy. What would it take for a company with $1 billion in cash and no debt to actually go to zero? Honestly, it is almost impossible to construct that scenario. When you have a company trading near an institutional cash floor with a growing high-margin defense backlog, the smart money is not going to stand on the sidelines. And sure enough, they are not standing on the sidelines. While retail day traders are hyper-focusing on daily pennies, the world's largest asset managers are quietly buying up the float. Institutional and hedge fund ownership has surged to a whopping 37.73%. Look at the buyers. BlackRock holds a massive 38.1 million shares, representing a 6.69% stake. Vanguard Group recently boosted their position to 5.16%. We are also seeing multi-million-dollar initiations from institutional giants like Auto BHF, etc., and CI Investments. These are not speculative retail accounts flipping shares for a quick buck. These are long-term, deep-pocketed institutions building cornerstone positions. When BlackRock and Vanguard are both aggressively accumulating shares in the same small-cap defense company, that is not a coincidence. That is a signal. With the smartest institutions in the world aggressively locking up shares, how does the rest of Wall Street view the upside potential from here? The sell side on Wall Street is in rare unanimous agreement, and when I say unanimous, I mean it. Out of 9 analysts covering Ondas, there are absolutely 0 hold or sell ratings. It is a clean sweep of moderate and strong buys. But the real story is the price target. With the stock currently trading around $8.87, the consensus target range stretches from $16.75 on the low end up to $19.81 on the high end. Needham maintains a highly bullish buy rating with a $19 target. This implies a staggering 123 to 164% upside potential just to reach what Wall Street considers fair value. Now ask yourself, how often do you find a stock where every single analyst says buy, and the average price target implies a double from the current price? That kind of unanimity is exceptionally rare in this market. But even with these massive fundamental targets, we still have to address the elephant in the room, that massive, highly volatile short interest. Let us look at the raw anatomy of this short position. We are talking about a staggering 44.6% of the public float sold short, representing 229 million shares. Now, because the daily trading volume has been massive, the days to cover ratio sits at a relatively low 2.7 days, which has allowed short sellers to cover some of their positions in an orderly fashion without triggering a chaotic squeeze. But do not let that fool you. Social and trading desk tracking indicates that borrow costs are rapidly rising. The pressure on these short sellers is intensifying with every single positive catalyst, and they are sitting on a technical powder keg. What happens if the next catalyst is so big that 2.7 days of covering is not enough? What happens if the float locks up even tighter as institutions keep accumulating? All of this pressure is building up, and it is waiting for a single fundamental spark to detonate. That spark is coming in a matter of days. Mark your calendars for August 13th, 2026. That is the date of the Q2 results call, and it is the ultimate trap for short sellers. If Ondas reports accelerating backlog to revenue conversion, proving that their massive $457 million backlog is successfully converting to cash, or if they show high-margin execution, or officially close their pending $125 million Cyberhawk acquisition, the short sellers will be completely trapped. The sheer volume required to cover 229 million short shares against a rapidly locked-up float will instantly force a violent repricing. Could we see the kind of move where shorts rush for the exit all at once and create a feedback loop that sends this stock parabolic? In this setup, with this short interest and this catalyst timing, it is genuinely difficult to rule that scenario out. So, when we synthesize this entire picture, the technical range, the balance sheet cash, and the upcoming earnings catalyst, how do we actually trade this? Here is your actionable playbook. If you are a short-term swing or options trader, do not chase breakouts above $8.50 or $9 into that heavy overhead supply wall. Instead, play the range. Accumulate shares or buy calls near the $6 to $7 support floor, and take your profits or write covered calls as the price approaches the $8.50 to $9 ceiling. But if you are a long-term growth investor, this setup is a screaming strong buy on all pullbacks. You have a literal $1 billion cash safety net protecting you from catastrophic downside, allowing you to comfortably ride through short-term dilution while holding firmly for Wall Street's long-term target of $19 plus. When you step back and look at the entire landscape, the final verdict becomes incredibly clear. Now, before I give you my final thoughts, I need to be completely transparent. Nothing in this video constitutes financial advice. I am not a licensed financial advisor, and this content is for informational and educational purposes only. Every investment carries risk, including the potential for total loss of capital. Always do your own due diligence, consult a qualified financial professional before making any investment decisions, and never invest more than you can afford to lose. Past performance and analyst targets are not guarantees of future results. With that said, here is the bottom line. Ondas Holdings is a fundamentally transformed autonomous defense giant that is currently highly mispriced by short-term trading volatility. Armed with an elite management team headlined by a former Mossad director, expanding multi-domain sovereign defense contracts, a $1 billion cash vault with zero debt, and a 44% short interest powder keg, all converging into an earnings catalyst on August 13th, ONDS presents one of the most compelling, highly asymmetric opportunities in the market today. The technicals are holding, the fundamentals are accelerating, the institutions are accumulating, and the shorts are running out of room. Everything is converging. Now I want to hear from you. Given the billion-dollar cash floor and the upcoming earnings catalyst, do you think Ondas can break through that $9 ceiling and sustain a move toward Wall Street's $19 target, or is the overhead supply too heavy to overcome? Drop your analysis in the comments below. I read every single one. If this breakdown gave you a new perspective on Ondas, smash that like button so more investors can find this video, and hit subscribe so you are locked in for our post-earnings coverage on August 13th. I will see you in the next one.